In China's vast and rapidly evolving e-commerce world, a battle for supremacy has been raging. For years, Alibaba and JD.com reigned supreme, their dominance seemingly unshakable. They ruled unchallenged, setting the trends and capturing the lion's share of the market. Then came Pinduoduo, a name that would soon send shockwaves through the industry. Pinduoduo emerged as a new contender that didn't just join the race, content to follow the established path. Instead, it rewrote the rules of engagement, challenging the very foundations upon which the e-commerce giants had built their empires. Launched in 2015, with a fresh perspective and innovative strategies, Pinduoduo strategically targeted a market segment that the established giants had largely ignored, the vast, often overlooked consumer base in China's smaller cities and sprawling rural areas. These consumers, often more price-sensitive than their urban counterparts, were constantly on the lookout for the best deals and value for their money, a demographic that had been largely underserved and overlooked by the big players in the e-commerce arena. Pinduoduo astutely built its entire business model around catering to the specific needs and preferences of this demographic, creating a unique and engaging shopping experience that was inherently social, highly interactive, and above all, undeniably fun. Shopping was transformed into a group activity, a shared experience that fostered a sense of community and excitement. It became a digital treasure hunt where users could collectively unearth incredible bargains and deals. This innovative approach resonated deeply with its target audience, and Pinduoduo's user base experienced explosive growth, far exceeding initial expectations. In just a few short years, a blink of an eye in the grand scheme of the e-commerce landscape, it remarkably surpassed its established rivals in terms of active buyers, a feat that demonstrated its growing influence and market penetration. This rapid ascent stunned the market, leaving industry analysts and competitors alike scrambling to understand the secret behind Pinduoduo's success. The company's rapid rise was fueled, in large part, by ingenious viral marketing campaigns and a platform meticulously designed to encourage sharing and social interaction among its users. Pinduoduo wasn't just another run-of-the-mill e-commerce app, it was something altogether different. It had evolved into a full-fledged social phenomenon, deeply ingrained in the daily lives of millions. By the year 2021, it had achieved the unthinkable, boasting more annual active buyers than even the mighty Alibaba itself, a truly remarkable milestone that few in the industry had ever deemed possible. The e-commerce landscape had been irrevocably changed, reshaped by Pinduoduo's innovative approach. The established giants were forced to sit up, pay attention, and devise strategies to counter this formidable new competitor. Pinduoduo's disruption was no longer a question of if it would impact the market, that much was already clear. The question now was, how far would this disruption reach? And what would be the long-term consequences for the industry? The digital marketplace had a new, dynamic, and undeniably disruptive leader. Now, the world was watching with bated breath, eager to see what innovative strategies and market-shaping moves Pinduoduo would unveil next. What powered Pinduoduo's growth? Social commerce. Its cut-down feature let users slash prices by inviting friends to help turning every shopper into a marketer. Shopping became a game, a group quest for bargains. This viral loop slashed customer acquisition costs and fueled explosive growth. Pinduoduo also pioneered group buying, letting users team up for bulk discounts straight from manufacturers. Farmers could sell directly to consumers, cutting out middlemen and lowering prices. The platform felt like a lively digital bazaar, not a sterile mall. By blending e-commerce with social media, Pinduoduo carved out a massive niche, even pulling customers from the big cities. After achieving remarkable success and solidifying its position in China, Pinduoduo's parent company, PDD Holdings, embarked on an ambitious journey, setting its sights on the global stage. The company was eager to replicate its domestic success on a much larger scale. In 2022, it launched Temu, a new online marketplace, offering incredibly low, rock-bottom prices on a vast selection of goods, spanning everything from trendy clothes to cutting-edge electronics and household essentials. The core strategy was simple, yet powerful: connect Western shoppers directly with Chinese factories, effectively bypassing established retail giants like Amazon and Walmart, cutting out the middleman, and offering unparalleled savings. Temu's launch was nothing short of explosive, fueled by relentless advertising campaigns across all platforms, including high-profile Super Bowl commercials that captured widespread attention. The result? Temu quickly shot to the top of App Store charts worldwide, becoming one of the most downloaded and used shopping applications globally. Its global business model closely mirrors the successful strategy employed by Pinduoduo in China, securing direct-from-factory deals, eliminating intermediaries, offering ultra-low prices to consumers, and providing a seemingly endless scroll of bargains, enticing shoppers to browse and discover new products. But global expansion is inherently risky and presents numerous challenges. Temu faces fierce competition from established players, increasing regulatory scrutiny in various markets, and the complexities of managing global logistics and supply chains. The company is betting that its significant price advantage will ultimately win over shoppers in every corner of the world. It's a bold, cash-intensive gamble, requiring substantial investment to build a truly global e-commerce empire from the ground up. The world is watching closely to see if Temu's ambitious bet will ultimately pay off and reshape the future of online retail. Pinduoduo's meteoric rise, a story of unprecedented growth in the e-commerce landscape, has hit turbulence, facing a series of challenges that threaten to slow its momentum. The initial surge seems to be losing steam. Recent financial reports show a concerning trend, profits falling, a significant downturn that has caught the attention of analysts and investors alike, and growth slowing in China, its primary market, signaling potential saturation and increased competition. At home, rivals like Alibaba and JD.com, have launched their own budget platforms, directly challenging Pinduoduo's core market segment, sparking a fierce price war, forcing all players to slash prices and impacting profit margins across the board. Pinduoduo is spending heavily on subsidies, offering deep discounts to retain customers, just to keep pace with the escalating competition. Meanwhile, Temu's global push, its ambitious expansion into international markets, is burning through billions, requiring massive investments in infrastructure and marketing. In marketing and logistics, building a global presence from the ground up. For every order shipped, especially internationally, Temu is losing money, operating at a loss to gain market share and establish its brand. A risky but common strategy for rapid growth, betting on future profitability through scale. The company is caught between facing a difficult balancing act, a brutal domestic battle defending its turf against established giants, and costly international expansion, investing heavily to conquer new markets worldwide. Profits are squeezed at home, due to intense competition and price wars, while cash burns abroad, funding its ambitious global expansion strategy. Investors are growing wary, questioning the sustainability of its current trajectory, as losses mount, raising concerns about its long-term financial health and the path to profitability. A clear strategy for achieving sustainable profits remains unclear, leaving investors uncertain about the company's future prospects. The digital titan's armor, its seemingly impenetrable market position, is starting to crack, revealing vulnerabilities and raising doubts about its long-term dominance. The big question: can PDD Holdings keep funding its global ambitions while fighting at home? Price wars in China drain resources while Temu's subsidies fuel massive losses overseas. The hope is to build a huge user base, then cut subsidies and turn a profit. But Western shoppers are fickle. Will they stay when the deals end? PDD's cash reserves aren't infinite, and the burn rate alarms investors. Every quarter, analysts look for signs of a sustainable business model. So far, losses continue to mount. Regulatory scrutiny and economic uncertainty add to the risk. The company is racing against time to make its strategy work before the money runs out. So, is Pinduoduo and Temu a business miracle or a mirage? The bull case, PDD's direct-to-consumer model and supply chain mastery, could build a global titan. The bear case, relentless price wars and unsustainable subsidies, may doom its ambitions. Critics say Temu's customers are loyal only to low prices, not the brand. The company faces the classic innovator's dilemma. Can it turn disruption into lasting profit? As of August 2025, the final chapter is unwritten. Will Pinduoduo's story end in triumph, or as a cautionary tale?